Hey, welcome back to the channel. Today we're going to be checking out Enphase Energy, ticker symbol ENPH, and as we can see, it's up a pretty decent amount over the last 5 years, but it's in a decent pullback over the last couple months or so. I think on the last earnings call, or earnings, it tanked pretty heavily, so I've been keeping an eye on it for a bit now, and I'm going to start probably digging into it more and more here. So let's go on over to the investor presentation. All right, so here we have the investor presentation for, I think it was the 2023 annual meeting of stockholders. So let's skim through this and see what we can find. All right, so here we have a little slide on, looks like just some stats on their technology. So founded 2006. 3.3 million systems in more than 145 countries, California headquarters, 917 megawatt hours energy storage systems shipped, 2022 revenue 2.3 billion, 1,400 installers. It looks like free cash flow from operations was about 744 million in 2022. I didn't see any type of guidance or anything though, so got more financial performance metrics from 2021, 22, 2023. Quarterly revenue by year, gross margins. Let's see, gross margins are getting better. Looks like they're improving. So quarterly gross operating income margins appear to be getting better as well. Let's see, quarterly operating expenses decreasing. So it looks like as they've been gaining scale, they've been gaining a little bit more efficiencies and bringing their bottom line margins up a bit. So more on their technology. And, I'm going to be totally honest, this is not something I'm super knowledgeable of. So, the semi space, or well, at least the solar space, I'm not really super familiar with their technology, their microinverters, the competition, and kind of the edges that they have. So I go into this pretty cautious. From what I've seen on different earnings calls and whatnot, they seem to be the kind of like the higher end player, greater efficiencies, better software suites. Their software control mechanisms seem to be better than the other competitors. They seem to be building kind of an advantage over some of those aspects and kind of stealing market share from competitors that way. Over the last, couple of years, we've seen a lot of tailwinds, especially with low financing rates for solar. So as interest rates rise, that's probably going to be a negative headwind for them. And we had just a lot of spending in like home improvements and things like that over the last several years as well. So I kind of expect that we could see a moderation when looking at their recent growth going into the future, but we'll see what actually ends up happening. So it looks like they're just giving us a good breakdown of employee headcount in different areas, worldwide, kind of supply chain metrics. So they look to be a pretty diverse player as far as the geographical outline part of their business. So, which, I mean, if you don't know anything about Enphase, they're basically specialized in producing kind of the tech chain or the semi microinverter chain for like solar. So we've got microinverters, EV chargers, load controllers, battery systems, IQ battery, heat pump, utility meter. So they're pretty much in a decent amount of that chain. So let's see what else we can find. This looks like this is their new technology that they've been releasing, and they kind of talked about this on their latest quarterly call as well, about having kind of to, as their sales staff or qualified technicians get a hold of this technology, they'll start pushing it. So they're kind of seeing maybe potentially a slowdown between the previous generation and the current generation. That seemed to be an excuse of why things might have slowed down a bit. Energy management, here we go. And yeah, so decent amount of good information here. All right, so let's go take a look at their latest quarterly release, and I'm not going to go too much into this. We're just going to look at brief numbers. So we got quarterly revenue 726, gross margin 45, operating income 167, net income 146, diluted earnings per share 102, non-GAAP 137, free cash flow 223 million. But I kind of want to look at their guidance, what they're looking at for Q2. Revenue guidance within the range of 700 to 750. So on a quarterly basis, quarter over quarter, they might be seeing a slowdown. So 80 to 100 megawatt hours of Enphase IQ batteries. So margins between the range of 41 to 44, 42 non-GAAP to 45. So what were their margins up here? So we have 41 to 44 that they're guiding for Q2, and they were at 45. So it looks like we might see a little bit of margin compression happening. So with that being said, let's go ahead and jump into previous historical financials. And here we can just kind of see the massive amounts of revenue, operating income, net income growth that they've had over the last, 5 years or so. Really started taking off in about 2018. This nice steady climb up. They've also diluted a ton during that time, but even with the massive dilution, their EPS has seen significant solid growth going forward. I don't know if they're going to continue diluting or not. I haven't heard anything about that, or if they would be potentially doing buybacks now that they're cash flow positive. Going to the balance sheet. Let's see. Balance sheet looks overall pretty solid. We've got a decent amount, 1.7 billion in cash and short-term investments. Is that about that? So long-term debt has been increasing, which doesn't really surprise me given the amount of growth that they've had recently. So free cash flow statement. Free cash flow. Operating cash flow has increased nicely over the last 5 years as well. Free cash flow, stock-based compensation. So we do see a decent amount of stock-based compensation. So that's something to keep in mind. I bet, even if they did a buyback at this point, they probably wouldn't even be, it looks like they did do a little bit of a stock repurchase right there. Was that 2021? Q4 of 2021, they did the stock repurchase. And what was that 2021 Q4? Would have been, that would have been like around 250 a share probably. Whew. So they did not time that very well. But so even if they are doing buybacks, they're going to have to buy back a decent amount before they even offset their stock-based compensation that they're doing right now. Ratios and metrics. All right, so margins, we can see some nice margin expansion as they have scaled up. They've actually been increasing their margins quite a bit. 44.95 on the gross margins. Let's see, what are we at? Operating profit margin 23 and net profit margin about 20. Operating cash flow per share and free cash flow per share metrics. We've seen steady, good growth, and, long term, I think long term as in like 10, 20, 30, 40 years, whatever. I think this industry probably does have a decent amount of tailwinds long term, but we will see kind of what happens in the shorter term, if they see a shorter term cyclical pullback or not. So yeah, gross growth has been about 50-60%. Operating cash flow growth has been really high. I think dilution, buybacks, not really seeing any buybacks. If we get into the valuation of it, man, this is what, I don't know. I'm not super confident in my numbers and projections on this one, just because I don't feel like I know the industry super well. So I'm going to kind of play it safe. We got a target rate of 15% CAGR with a margin of safety of 2.5%. Dilution, let's see here. Actually, historical yields, I mean, that's not really going to matter because they kind of went from unprofitable to profitable. So we're not going to have a lot of historical information on a yield basis of what the market has been valuing the company at. Like I said, we can see massive amounts of dilution into about 2020, and the last couple of years haven't diluted too drastically. Decent growth in the bottom line metrics and decent margin expansion over the last 5 years or so as they've ramped up. Recent years, we can see dilution has been about like 1%, less than 1%, 7%. So they're most likely out of their dilutive phase, hopefully. I could be wrong on that, but I would expect them to kind of be out of the dilutive phase now. So for the assumptions, what I've done, even though they've had a ton of bottom line growth in the last 5 years, on a percentage basis, I'm kind of expecting that to normalize. So I could not find any type of like yearly guidance or 5-year guidance or like anything like that from them. So I'm really trying to just like pull this out of thin air. But I think it is reasonable to say that they could grow around 20% in the base case, maybe 33%. Bottom line growth would be possible. If they're growing less than 13%, that's going to be pretty rough. So the let's see, the 10-year Treasury risk-free rate that we have is from the very bearish to very bullish is 4.47 to 2.3. Dilution, we're gonna have to change that actually. So we're gonna do this 20. Boom. All right, so dilution, very bearish, we got 1.46, and the very bullish, we got 0.71, so basically no dilution. Pretty light on the dilution. Bottom line growth, very bearish is 13.85, to very bullish is 33.82. EBIT yield spread, I made some adjustments on this, so we can see previously over the last 5 years, they've been trading at a negative yield spread, well, negative to the risk-free rate of the yield spread. So made some adjustments to make that actually a positive correlation to kind of account for slowing growth. And let's see, EBIT yield spread is, we're going to do actually a larger variation here. We're going to do 10, 10, 10. That could be pretty good. Let's actually go 15, 15, 15. Okay. So we got a 15% increase across the scenarios. Very bearish is 1.3, very bullish 0.74. For the EBIT yield spread, net yield spread is 1.26 to 0.72. Free cash flow yield spread is 1.45 to 8.3. And that pretty much spits out very bearish buy price of $57, a bearish buy price is of $80, base case buy price of about 113, bullish buy price of 166, very bullish buy price of 255. So obviously, like I could be way off by just accounting for less growth than what they actually do experience. If they're able to keep up like 40% growth, man, that would be crazy, but it would change the valuation a lot. Actually no, negative 60. So if they're doing 40% growth, that's going to be way more favorable. They're going to look like they're in kind of a lot more interesting valuation territory right now if they were going to do around 40% growth, or 30% growth even for that matter. But I just don't feel comfortable giving them that much right now. So yeah, I might give them the base of 25, but for now I'm going to go with this. So we got essentially buy prices between 57 and 255 across these different scenarios. So it's getting interesting, you know. I've told people previously that like my point of interest is kind of like a 120 probably for Enphase. That's probably going to be my point of interest. And I could see myself maybe starting a position in that 120 area. But I think I still definitely have a lot more homework to do on this one. I need to understand the industry better, understand, you know, how much of a advantage that they have over their competitors, and how likely industry tailwinds are going to persist for solar over the next like 10, 20, 30 years, which I think they will persist, but I think it might have some type of cyclical nature where a lot of the build out happens in certain macro conditions that are kind of like cheaper debt, better liquidity, and just better rates to build out solar. So that's what I got. Hope you guys enjoy this. Have a great day, and we'll catch you later.